Alright, let's talk a bit about Super Micro stock. What's keeping a lid on share price and where do I see this company going in the future? I think that I have a okay grip on companies like Supermicro. I've been working in the data center industry since before the pandemic at Dell Technologies at the time, and then Google, and now another American company that's doing some storage, in this case, backup storage. But Supermicro, mainly in compute, supercompute, they're doing liquid cooling and SSDs, which have increased a lot in price as of late. This is very much reflected in revenue numbers, although the market is questioning this a bit as of late. What do I mean? Well, let's just take a look at some of the revenue numbers and try to extrapolate the future a bit from that. If we look on an annual basis, we can see that from 2023 to 2024 we saw massive growth, more than 50%. At that time, stock price was priced a lot higher. It was priced for this insane growth, even with margins decreasing slightly. As you can see, gross profit here, gross margin is extrapolated from that, but with revenue more than doubling, gross profit did not more than double. So this is a little storm cloud of worry that's keeping a lid on stock price for Supermicro in this case. They also failed to provide the accounting on time to the market with reports to the SEC. Not good. There are some questions around the way that they supply the product. If they are supplying this to Russia, they got a fine for that and lost Amazon as a customer in that case. You could not really tell looking at the numbers. Perhaps looking at 2024 to 2025, we can see that growth rate, yes, it did slow down, but it's still massive growth. On a quarterly basis, though, we can see that if we compare the latest quarter to previous quarter, just quarter to quarter, we can see a slowdown, which is not a good sign. They point to deferred revenue as companies are waiting for NVIDIA GPUs to be released to the market and that growth will pick up. But why did management miss on guidance on this? And can we trust the new guidance? Not completely certain. This risk is baked into the stock price. They have a low price to earnings compared to the growth rate that they have. But this is with all this risk baked in. We saw these shady deals to companies that were under embargo. We saw the missed deadlines on the accounting matter, and we're seeing growth slowing down. So those are some negatives, although there is a lot going on for companies in the computing space. There is a lot going on for Supermicro in this case. I remember back when I was in my early 20s, I started selling primary storage, the EMC portfolio, basically. We would go out, we would talk about SSD, less power, less cooling, no more moving parts in your data center, just set it and forget it. And back then, the price of SSDs was still a bit expensive. It has gone down, 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 like it has historically. HDDs before that, nearline SAS before that, just cheaper and cheaper and cheaper as the technology matures. Although, as of late, something has happened with SSDs, with all the demand from AI workloads. Prices on SSD have increased 50% to the fury of gamers and purchase departments of IT organizations alike. And if we look at the Supermicro store online, we can see out of stock for the solid state drive, the SSD, some of the other ones as well. And yes, indeed, quite the expensive price just compared to before all this AI craze started. So definitely selling shovels, definitely a good fit in today's market. It's not only AI, it's all the applications that we run today, all the production. It requires more powerful compute all the time as software develops. I know that we hardware guys are a major bottleneck on development for a lot of things. There are plenty of software that's just waiting for better compute, better storage, and we're working as hard as we can to just make better appliances for the data centers. But this is a bottleneck. This is hugely in demand as a result. Obviously, just flying off the shelves here. But nonetheless, Supermicro delivered a slowdown in growth. They missed on guidance. And can we trust future guidance? What about this accounting scandal? Do they still sell to embargoed markets? There's clouds of risk over the stock, keeping stock price down. For now, will it change in the future? I don't have a crystal ball, impossible to tell. But the demand for the product is there indeed. They're doing liquid cooling. This is gonna be in demand, in the future for sure. Not in the Nordics yet. We don't have that need. We're international, is behind America in terms of development, but for sure it's gonna sell in America, and then in a few years after that in Europe and Latin America, the whole EMEA, so to say. But they are right in time with their offering. In demand offering. What rating would I put on this stock if I was an analyst? Which I'm not, by the way, doing this video purely for your entertainment purposes. But if I was an analyst, I would put a hold rating on this company. I think that the product is great, the market fit is great, but missing on accounting and now missing on guidance makes me a bit wary of management, and I don't trust people with my capital easily. They have to earn that. There's plenty of companies on the market that has earned my trust, earned my investment, where I can put the money, but hold rating, not straight up sell, not straight up buy, just wait and see. Put on the watch list, basically. That's my judgment of Supermicro as I'm recording this video. Alright, that's been it for this video, talking a bit about Supermicro. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.